All right. Today, I want to say up front that you need to look at this entire market very closely or you will not get the full picture. And I'm still seeing so many bears coming out of the woodwork saying the market has topped and saying that the market is going to crash and saying that the market is going a lot lower. And I'm telling you right now, these people don't have any clue what they're talking about. This is a very strong and bullish market. It is simply money going to other areas that these people do not even bother to look at. And that is why you need to look at everything that I talk about in these videos, including the Dow Jones and the small caps, because that money is not leaving the stock market. It is simply moving around within the stock market, and that is a very bullish development. The only time you should be getting bearish on stocks is if money is leaving stocks, which means it is selling equities and going somewhere else like real estate or bonds or money markets or anything for that matter. But if money is selling a certain stock to buy other stocks, that is a very healthy rotation, and that is exactly what is happening in this market. So do not for 1 second think this is anything more than just a pullback. And no, I don't care to predict the exact day the market will bottom or the exact price, but as long as you understand it's a bull market pulling back to a higher low that is then going to go on to make a higher high, that piece of information is very valuable as a swing trader who doesn't necessarily need to buy the exact bottom, but is simply looking to make money. So when we look at SPY, we can see we are back to the daily 50 EMA. We did spend about 2 days below it, but again, with moving averages, there's no exact science. Everybody uses different moving averages. They are just a rule of thumb and a guide or a reference point on where stocks are moving relative to their daily moving averages. And a 50 daily average within a strong bull market is a pretty good place to find support. So when I look at SPY, I still see a range, and I still see a very important part of that range being this risk level at 542. If we can break back above 548, that is when the bulls are going to look a lot stronger. And while we're below 548, it is possible that we could pull back deeper and the bears could be gaining strength. But if we get above 548, I think the bulls are going straight to that gap at 553 and likely back to the top of this range at 556. And then above that, we have a gap to fill at 562 and brand new all-time highs. Yes, I do think we will make brand new all-time highs, to make it very clear, which means as we are going lower within this pullback, that is still opportunities for bulls to get low risk long entries on their swing positions. And if you are only a short-term trader, then that means nothing to you. In the short term, nothing matters what is going to happen a month or two from now. You need to be concerned with what's happening intraday or the next day. So there is a lot of you that watch my channel. Some of you are day traders, some of you are swing traders. It's completely fine. Everybody's going to have their own strategies and their own risk and reward setups. What's more important is that you are managing risk, because you always need to be prepared for both scenarios. So in the bearish scenario, SPY does not break above 548, and we could still go fill this gap at 537. And a great risk level above or below right now will be this daily 50 EMA right around 542. Above 542, we likely go to 548, and then above 548, we likely go to 553 to 556. And while we're below 548, if we break 542, we're looking for 537. Keep it very simple and understand bigger picture and your trade plan. If you're a longer term swing trader, it is completely fine to still buy dips at critical support and strong support zones, even though we are in a risk off territory while we're below 548. So risk off means we no longer have that extremely strong bull trend of going higher each and every day because we're starting to pull back. And during a pullback, you never want to try to get too aggressive, like lots of you that are still accumulating short dated call options, hoping this is the bottom. That is not how you trade a risk off market. If you're accumulating shares in swing trades, that's completely fine because it's very easy to manage risk. It is not easy to manage risk on call options while we're getting a short-term downtrend. So watch 542, whether we're above or below it early in the week is going to matter, and above it, the bulls could take back control very quickly. On the NASDAQ 100 triple Qs, we were up 1.03% on Friday, and it is the same exact story as SPY, although this is where we had the majority of the selling during the rotation. Money was leaving big tech and going into small caps and mid caps, which favors the Dow Jones and the Russell 2000. So right here in the triple Qs, the risk level is right around 463.8. If the bulls can get above that, I'm looking for a push higher towards 473. And then above 473, we'll be looking for 480 to 482. While we are below 463, it is possible we do fill a gap right around 455.58, and we do have a support right around 453. So watch that risk level at 463. If we get above it, that is going to favor the bulls, and while we're below it, we still have the possibility to fill a gap. On the Dow Jones, we were up 1.62% on Friday, and this is where I want you to focus very quickly. Even if you don't trade the Dow Jones, you should be aware of this. We have a full bull trend. The arrow that I drew said that we would bounce down here towards support between 398 and 402, find support, and then run higher towards 415 to 420. I do think we're going to 420, but 415 is a very conservative target on where we will likely go from this bounce. And you can see this bounce is now officially a pivot of a higher low into a higher high. And when you have a pivot and a strong bull trend, there is a very good chance price and trend will move higher. The trend is pushing price higher. We have the higher low, we have the pivot, we have the confirmation, and now we simply just need to break above this resistance at 407.5. Above that, we should easily make that brand new all-time high at 415 and then 420. So right here, I think this is a no-brainer. Buy the dip and stay bull above 398 to 400. But if we can't hold above 398, that is going to be your indication from price to get more risk off. On the Russell 2000 IWM ETF, we were up 1.65% on Friday, and we do have yet again another higher low, higher high pivot, which confirms we are going higher towards that price target at 228. So I am expecting to see 228 very early in the week. And then I think above 228, we start pushing higher towards that previous all-time high at 242. And yes, the small caps are very likely making a brand new all-time high this year. They have been suppressed now for over 2 years, and they are just now starting to break out and get all of the confirmation from price and trend. This is a very powerful bull trend with a very powerful weekly chart as well. And finally breaking out of that base of consolidation and support, looking more and more bullish each and every day with more and more confirmation from price and trend that we're likely going higher. So 228 at this point is a lock in my opinion, and it's a very conservative price target. I do think we're actually going into the 240s. Although that is more of an end of year price target, even though I do think we can go a lot higher than that. So small caps are looking very bullish above 223, and above 223, we should easily get to 228. On the ARKK ETF, we were up 1.31% on Friday, and this is another risk on or risk off sentiment. I'm not actually trading ARKK, but you do what you want. As long as we can hold above 45.7 and break above 47, we should run higher towards 50.7. If we can't get back above 47, this is still looking like we could be in a pullback that's going down towards 44. On the VIX, we were down 11.32% on Friday, and the VIX is crushing from 18. And from 18, I still think it's very possible the VIX is going to continue to crush down towards 13 as we see the indices rallying higher off support. If we get more fear and we lose support, the VIX will remain elevated and start spiking higher towards 20, and we will have a lot more volatility in this market. So don't rule it out completely, but I do think from here the VIX should start to crush. On Bitcoin, we are currently trading just above 68,000, and once more we have this look of a higher low into a higher high pivot, and we did get the higher high here. And this looks like we should push back to the top of that range at 71,000, and then above that we have another brand new all-time high price target right around 75,000. So Bitcoin looks bullish above 65,000 and above this bull breakout at 67,000. On Nvidia stock, we were up 0.69% on Friday, and as I've said before, we filled the gap now at 106, and from there it is possible that was a bottom and we're going higher, and we do have a gap at 122. So from here I want to update these arrows because we've already hit the price target to the downside, and that was the scenario that won because we did get the lower high rejection and the break of support. But now that we're here at another support at 115, I think there's a very good chance we're going straight higher to fill this gap at 122. And then if we can get above 124 to 126, the bulls should be back in control and we should start to see a new all-time high. If we can't get above 126 and we get rejected from 122, then we'll be looking for a trip back down towards the bottom of this range at 106 to 109. So 115 is a great risk level, and whether or not we're above or below it, while we are below it, you can stay risk off and look for lower prices. But once we get above it, we will be looking for 122. On Tesla stock, we were down 0.2% on Friday, and we're very close to filling this gap. And I'm going to delete these arrows, and I'm just going to give you a crystal ball prediction from yours truly. And I think there's a good chance we come down and quickly fill this gap at 213. And then I'm looking for another very powerful bull run that is going to take us all the way into September. And that is going to likely push Tesla higher towards 289 to 300. Now, this is all contingent on staying above this support right around 212 to 213. And if we break below that, you can get risk off. But while we are above that, I am looking for another very powerful bull run here. And in the shorter term, we're looking for a push to the top of the range at 230 and a gap fill at 245. On Apple stock, we were up 0.22% on Friday. And once more, this is a stock I do believe is going higher. And I'm just going to move my arrow over a bit. And I'm going to tell you, as long as we can hold this support right around 216 to 218, we should be well on our way higher towards this gap fill and price target at the top of the range at 232 to 234. If we can't hold this support zone between 212 and 218, then you can get risk off. But while we are above it, I think this is likely going higher, and it's a very low risk, high reward trade. So jumping back over to the S&P 500, we have a very clear range in the S&P 500, but more importantly, we have lots of bullish price action in the Dow Jones and the Russell 2000. And that is a risk on indicator that the whole entire market is now looking more bullish, and it's not just narrow market breadth. We are seeing more stocks participating in this bull market, which is better because it's only going to strengthen the bull market as a whole. And now we should start to see more stocks participating and more stocks joining the bull trends. This overall is more bullish for the market, more healthy for the market, and should tell us that we're about to see an everything rally of all stocks going higher and not just a handful of mega cap big tech companies. So I am still very bullish, and I do respect that we are in a risk off territory in SPY in the triple Qs, and that's why I'm telling you, if you're buying dips at support, you should be more focused on longer term swing trades. For you short-term traders that are only focused on what's happening in the next few minutes or hours, you need to respect the fact that this pullback could go lower. But as a longer-term swing trader, that is an opportunity to just continue to accumulate at lower prices and then let time do the rest of the work for you and let those swing positions run. So this is still a very volatile market, and I do believe that volatility is going to be great for trading, and that is why I think this is a great time to be part of the Discord community. So if you want access to all of my trade ideas, my technical analysis, and my intraday updates, that's going to be in my Discord server, and you can find out how to join the Stocks Channel Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.